Hello and welcome to our new video on our taxation series. Today we are going to talk about a very important aspect or topic of income tax, that is agricultural income. How it is used as a tool to evade taxes in India. So I am going to give you some practical examples as well so as to cover all the important issues when it comes to agricultural income. So as per Income Tax Act, section 10 subsection 1 says that any income that you derive from an agricultural land, whether it is rent or whether it is agricultural produce, fruits, vegetable, anything that you cultivate on an agricultural land in India is completely tax free. You did not pay even a single rupee tax. And this is not only applicable to individuals like you and me, but also for corporates or companies who produce agricultural produce and sell them in the market. So whenever there is an agricultural produce, absolutely you need not pay any single rupee of tax in India. But there are some businesses that include agricultural activities as well as non-agricultural activities. So in that case, the Income Tax Act has provided a bifurcation. That is, in case of coffee, rubber and tea, there is a specific percentage which is a business part and the other one is an agricultural part. Now coming to the main part where agricultural income is used to convert the black money. According to the CAG report in 2019, it was pointed out that 5 billion rupees was black money which was converted into white using the agricultural income. So this is a very big problem that India is facing. Let me give you a very famous example or a very famous case that happened in the year 2009. A prominent politician in Shimla who owned apple orchards in the year 2009, and he artificially boosts his agricultural income to the tune of 6.5 crores, whereas previous 2 years the income was only 10 to 20 lakh rupees, and there is a sudden rise in his agricultural income, and you know from where the money comes. So when the income tax department investigated the case, it was found that the apples were sold to non-existent addresses, and it was a complete fabrication of agricultural income so as to boost the agricultural revenue from non-agricultural sources so as to convert the black money into white money. And not only in this case, most of the cases where big amount of agricultural income is shown in the income tax return is mainly used to convert the other sources of income to an agricultural source and to make it white. Now a practical example, say of Mr. Raju, who owns a business and has a net income of around 1 crore rupees, and on this he has to pay an income tax of around 30%, taking the highest tax bracket. So in this case, instead of showing the entire 1 crore of income as agricultural or non-agricultural income, he wants to show a part of it as agricultural income, say 25 lakhs as agricultural income, because he owns an inherited agricultural property which he got from his ancestors and nothing has been cultivated in it so far, and suddenly there is a 25 lakh rupees agricultural income that is declared in his income tax return. So now what is the problem? Now there are three problems here. The first one is his sudden spike in his agricultural income, a fall in his business income, and the third one is the agricultural land which he owns or which he got from his ancestors is mainly used for growing paddy. And in this case, he is showing an income of 25 lakhs for 10 acres of land. So in this case, 1 acre of paddy field can give you an income of around 75,000 rupees to 1 lakh rupees. But here it is, so the maximum for 10 acres could be 7.5 to 8 lakh rupees, or maximum is 10 lakh. But he is showing an income of around 25 lakh rupees, which is not proportion to the land that he owns. So the finance minister has said that in case if your agricultural income is beyond 10 lakh rupees, then it could be picked for scrutiny. So be careful while showing your agricultural income because you are bound to get income tax notice. So this is the first problem. Now we have a second problem here as well when it comes to owning of agricultural land. So now coming to the second part, which is the most interesting one. So listen carefully. Same person, Mr. Raju, he thinks of buying a rural agricultural property because he has got some unaccounted income, and in that case he buys a rural agricultural property for rupees 20 lakhs. Why rural agricultural property? Because in case when you sell it, if there is a profit or if there is a gain, then it is not taxed under the capital gains because it is not a capital asset. The rural agricultural property is not a capital asset at all as per section 2 subsection 14 of the Income Tax Act. So now Mr. Raju buys the agricultural property for rupees 20 lakhs, but the actual value of the property is rupees 50 lakhs. That is 30 lakhs he pays in cash, and 20 lakhs is the registration value or the government or the stamp value that is required for registration purposes. So 30 lakhs is paid in cash. Now after 2 years, he gets a valuation of rupees 1 crore and he sells the property for rupees 1 crore. So the gain is 20 lakhs minus 1 crore, that is rupees 80 lakhs. So here that includes 30 lakhs which was paid in black as well. So in this case, the entire amount of 80 lakhs including 30 lakh rupees becomes white because he need not pay any capital gain tax when selling the agriculture or the rural agricultural property. So friends, the real farmers actually do not get rich, but the farmers or so-called farmers are in our Indian society become rich by using these means of converting black money into white using the agricultural provisions. So thank you very much for watching. In case if you have any questions on this topic, please feel free to drop your comments below, and in case if you have not subscribed, please do it, like and press the bell icon so you do not miss any important topics on taxation series. Thank you very much for watching.